Hey everybody, it's Pete. Welcome to Stocks for Breakfast. Welcome back, I should say. We're going to hop right into it. We're going to talk about the NASDAQ and obviously NVIDIA and whether or not smart money is selling NVIDIA at the highs. And we do actually have a little bit of proof that that's happening right now with the CEO of NVIDIA actually selling $95 million worth of stock, as well as other chip companies. And we actually have other chip companies reporting this week, Micron specifically. We're actually going to take a look at that. So there's a lot of stuff going on this week. And really what we're going to try and do is we're going to map out what's going on for the week, how we could be looking at trading this week, and more importantly, positioning our allocation heading into this big economic data that's coming out on Friday. We're actually going to break that down for you right now. But let's stick with what's going on over here. We really want to get an answer to the question whether or not the stock market is topping out simply because heavy volume selling came into NVIDIA stock, and whether or not we should be worried about that. So I just want to be super clear. It is kind of obvious that as the market is rallying here, you can start to see some more heavier volume days on the way up, which is essentially saying that money is being sold into these technology stocks. And we can actually kind of work our way over into NVIDIA and seeing the same exact thing, where we are starting to see some much heavier volume trade during these pauses. And that's really not what you want to see. You can actually see over here during this pause, you should be getting light volume pause to imply follow through, but you can actually see that the pauses are much heavier. And even on the last 2 days. Now, we got to put last Friday into context because Friday was actually options expiration. And when options expiration happens, volume increases dramatically. I'm more concerned with what actually happened over here on Thursday. So what we need to talk about here is two very different things. Can the stock market withstand selling in NVIDIA and still rally? Because I think all of us can really pretty much admit, whether we like it or not, NVIDIA is such a large portion of so many major stock indexes right now that it is carrying the market by itself. Now, I know Microsoft and Apple, both of those stocks are still at or near all-time highs, but let's face it, the story is about artificial intelligence. The story is about NVIDIA using artificial intelligence to their advantage by building the chips that is going to fuel the artificial intelligence. But I want to walk you through a little bit of a history lesson from when I actually started day trading stocks way back in April of 2000 and experiencing what a lot of people call the dot-com boom and what happened after the dot-com boom and how it was traded. Now, I think the difference that we're going to be paying attention to here and right now, I'm going to show you this on the screen, and this is a part of my research, which is essentially this. So if you've been a big follower of the channel, or if you happen to be new to the channel, what I'm known for is something called order flow stacking. And order flow stacking, I'll give you a very detailed definition of what that means right now. Order flow stacking is essentially the opposite of what everybody tries to do unsuccessfully in the market, which is they try to predict. They're looking at a stock and they say, where do we think it's going to be X months in the future? And then they try and put trades on or investments and saying, I hope it goes there. Right? That's not the easier way. That's the hard way to make money in the stock market. The easier way to make money in the stock market is what we call institutional shadowing. So institutions are the reason that stocks go up and down. And it is infinitely easier to have conviction and see, quite frankly, predictable profits by shadowing what the institutions are doing as opposed to predicting what they're going to do next. So part of the research that I do is what I just shared with you on the screen here is we are essentially looking for the order flow. The order flow is institutional buying and selling pressure. And you can see for the better part of the last month or so, even though we're going up, there's been some very heavy signs of selling on the way up. So whether we're talking about that happening in NVIDIA or we're talking about that happening in the bigger picture of the market, you can see that we're tracking that, right? So there's really kind of two things going on right now, two battles. There is the order flow in NVIDIA, which has been on fire for probably the better part of a year. And that's been carrying the market. And everybody who's got that 401k out there, beautiful, right? Everything's going up mostly because of that one stock. But the thing that I want to teach you today, the big lesson is, as good as that is, what if the smart money starts to sell? What if we see institutional outflows from NVIDIA, the one stock that's been carrying the market? How should we be thinking about future trades, if not existing positions? So first case, Worst case scenario is other sectors do not start to show buying pressure. Now, the good thing is we are starting to see that. And you can actually see here, we're starting to see some lighter numbers on the heavier side, on the bearish side of things, which obviously is the red. And we're starting to see some other sectors showing signs of life. Now, the language that you want to learn as a trader or a stock market investor is you want to call that market breadth. Market breadth essentially means how many stocks are doing the same thing. And in this case, we're looking for as many stocks as possible, buying pressure. And again, I want to get into what I specialize in, which is order flow, which is interpreting or just simply reading what the smart money is doing right now. So we're basically shadowing what the institutions are doing. And I'm showing you now on the screen how I do that for everybody in our community. If you want to come and trade with me for a couple of weeks, there's a link in the description. No pressure on you. There's actually a free trial. You can get in there and check it out for 3 days. If this kind of stuff really kind of interests you and gets you geeked out and you really want to learn a lot more, you can click on that link. So as we're tracking order flow, the key, I should say, or the secret is you want to track order flow over time. So if you can think, let's actually use Tommy here as an example. Let's say that Tommy owns a hedge fund and he decides he wants to be a buyer of NVIDIA, for example. Tommy will then call his trading desk and all the men and women on the trading floor will say, okay, we're now in the market to be buying 10 million shares of NVIDIA, just for example. So they can't just go out to the market and say, let's go out there and get 10 million today. It doesn't work that way. Number one, it would be very difficult to get the fills that they need at the price they want. And they would kind of be alerting other people in the market that there's a big buyer out there and they want to do it as quietly as possible. So what they are doing is then they are taking out their wallet and they are starting to slowly buy it over days, over weeks, over months. Now, the big question is, how do we see that while it's happening before it's too late, right? So right now we're starting to notice that in the other direction. How do we notice when an institution is starting to build a position so that we can kind of piggyback on their buying pressure, so to speak? So I'm going to give you something that I want you to write down. Again, if you're a regular viewer of the channel, you know that we're big on post-it pad moments. So every single day, you want to run a super simple scan in the markets. You want to run a scan that basically looks for above average volume and a strong close from the opening price. So I'm actually going to walk you through how to do this because essentially what we're talking about is if we're looking at institutional order flow, the second part of institutional order flow, after we've defined what it is, we now need to track it. So when I'm talking about taking out the wallet and I'm talking about Tommy's hedge fund, for example, he's going to be doing it over time. So order flow stacking is the process of tracking smart money buying and selling over time. So the longer it's happening, the bigger, the deeper the commitments that the institutions have in those stocks. So think about that. Think about how much easier it is institutional shadowing of saying they are buying, and I can see that, and I can see when they're done, versus putting on a trade and saying, my gosh, I hope this goes up, and I hope it's someplace a month from now or 3 months from now. That's very hard to do because nobody can predict the markets. It is a lot easier to say I'm on the right road, and I know as long as I'm on this right road and nothing changes, I'm good. So that's kind of what we do over here. So all of this kind of starts by running a simple scan. So obviously one thing we want to talk about here is that you can see that market breadth outside of those bigger stocks. And let's just say specifically NVIDIA, Apple, Microsoft perked up a little bit. This is over the last 5 days, but you can see selling has come into those stocks, right? So what we would want to see happen to increase our conviction is we'd want to see money starting to flow into other areas of the market. And we have to ask the question, why does that happen? Well, as good as the stock that NVIDIA is right now, we got to make a distinction between the stock and the company. The company's doing fantastic, but investing in the stock at this point has expectations. So a lot of the expectations for artificial intelligence are kind of what we call baked into that stock already. So the likelihood of continued move based on what the stock has already done starts to get a little bit lower because the valuations and the future cash flows just simply can't keep up with the stock price. And we're starting to see that. As we said here, if the CEO of NVIDIA is actually starting to sell, we might want to sit up in our seat and take notice, right? We'll get a little bit more information about the semiconductor stocks in general. We have Micron, which is scheduled to report after the close on Wednesday. That's really, really important. But before we do that, I want to walk you through that search that I was talking about before. So if you happen to have FinViz or any other good trading software, what we're actually going to walk you through right now is we're going to walk you through how to find the start or the continuation of order flow, of when you are shadowing institutions and saying, wow, they just really stepped on the gas. Maybe I need to pay attention to that. It's a simple scan that you can save, whether using FinViz or whatever charting or screening software. I'm going to show you how to do it now. Just build it, save it, and pay attention to it at the end of every day. Now, I want to give you a heads up, though. A lot of stocks had massive volume spikes on Friday because it was options expiration. Options expiration always explodes the number of stocks that have increased volume. On a normal day, we'll have maybe 4 to 10 stocks that meet this criteria, and then we go and take a look and see whether or not institutions are doing something specific that we need to keep an eye on. So here's the search that I normally run. So when you go into FinViz, I'm going to actually pull this out a little bit so you can actually see it. And you can see there's 9,555 stocks before we even start doing anything. You want to make sure you go over here to all, and we're going to start out with some minimum criteria. So you're going to go over here to average volume. Obviously, we're comparing them stepping up and buying a lot because we need to compare it to what it normally does. And I'm just going to use 2 million as an example for this demonstration. And then we're going to go over to average true range. Average true range is a qualifier for how much the stock could potentially move to tell us if there's sufficient profit potential. And I usually keep that over $1. So it means at least $1 I want the stock to move intraday. Now, this is really where we start to filter things down. That's just what it normally does. Okay, just want to put that out there. Now we need to know if something abnormal happened. Now, one of the first ways we're going to measure that is we want a change. So we're looking at buying pressure, buying stacked order flow, so that when we're looking at these screens, we can actually tell it's happening over time and it's happening on an individual day. But we call it kind of the ripple effect, where you notice on the first day and then it kind of spreads itself. Now, I want to just really give you the significance of this. Raise your hand if you've ever seen a stock 4 or 5 weeks after the fact. You're like, oh my gosh, I wish I would have caught that trend. Look how beautiful that was over May and June, and I'd missed it, right? Doing this little bit of work that I'm about to show you right now with scanning for increased activity, institutional activity. This will put you ahead of the headlines and at the very least start to give you stocks that should have your attention because they now have institutional attention, all right? So as we're running the scan, again, you could do it anywhere. I just happen to be doing it in FinViz. So I got the minimum criteria there. Now we want to have a change positive by at least 1%. Now these are the two big ones right here. Change from the open positive by 1%. Now again, it's pre-market right now, so there's not going to be a lot of stocks over here. You'll run this scan after the market closes. So that's the minimum criteria that tells us there was a strong day from the previous close, a strong day from today's opening price, which means it will have a big green candle in this case. But now this is the difference maker. You're going to go over here to relative volume, and you're going to sort that by over 1.5. Now, again, this is not going to have a big list because it's 7:30 in the morning, 7:43 in the morning, but that's the scan. So you want to take a screenshot of that. I'll leave it up there for a second so that you can pay attention to that. And I'm going to show you how this kind of works your way into finding ideas for the day and how to spot when institutions are doing something and you start to build your list of ideas. So hopefully you took a screenshot of that. So when we're working our way over here into stacked order flow, what we eventually start to do is we start to pay attention to trends. And you can see when there is stacked order flow and significant stacked order flow, this is what makes stock trading, the stock market, infinitely easier than trying to predict. So now you can actually even just see, just with this minimal training I'm giving you right now, I'm sure that your eyes are gravitating to where there was green dark for a few weeks. And again, Could be a few weeks, could be a few months. It could be green for a couple of months, but maybe not necessarily dark green. But the dark green means something significant is happening. Now, just to give you an idea of how I'm breaking this down for everybody in the community, there's multiple ways that I'm doing this for everybody every day. I couldn't make it any easier. It could maybe take you 5 minutes to read the research that I put out there and another 3 minutes to place the trade, right? So what I'm doing is I'm essentially showing you how over the last 24 years, I found the simplest way. I don't want to say secret. It's simple because I'm doing the work. It's simple because it makes sense. If institutions move the market, therefore we should be following what the institutions do. When they buy, we buy. When they sell, we sell. And the research that I'm providing every day for the community is simply telling us how often they're doing it, how long they've been doing it, and then you can actually see the progression of how aggressively they've been doing it. Now, I don't know about you, but that sounds a lot easier to trade stocks and find predictability by shadowing the people that are moving it in the first place, as opposed to forecasting what could possibly happen some point in the future. I don't know about you, but I like to keep things easy, simple. I like to sleep well at night, and those are the kinds of things we do. So if I can inspire you to maybe do the similar for yourself, where you start to track this on a daily basis and say what is happening, how long has it been happening, and to what degree is it happening? Now, that's the big thing I want to point out here in this sheet. So you can actually see what this sheet is representing right now. And again, I do this for the entire community. All you got to do is be in the community. And if you want to learn about this, you can just click that link. It's a no money down trial if you want to get started. What you're seeing here are the degrees of money being spent. Now, in this particular research that I'm doing, we do it a little bit differently. We're actually tracking the percentage of stocks that meet minimum criteria, which is kind of the criteria I just gave you, volume and volatility, right? The two things that there's institutional attention and there's opportunity to make money. We track the percentage of stocks per sector every day. So you can actually see over here when energy has been strong, when basic materials have been strong. And you can actually see that there's pockets of opportunity. Industrials were strong, healthcare was strong, consumer defensive was strong, consumer cyclical was strong, and then things started to change dramatically. So what we're really looking to do is we're trying to say how many stocks are doing the same thing that the market's doing, and how long have institutions had attention on those stocks. That's really what we're looking to do. Now, to add conviction to that, because we always want to be adding to the argument. We always want to be saying, what else can I put in there in order for me to feel conviction that if I accept risk on this trade and I have a stop loss, how do I increase my conviction that there's a likelihood of my profit target being hit versus my stop loss? And the way that we add more depth to that is, let's just say, for argument's sake, there's 50 stocks that meet that criteria in, let's say, energy stocks, for example. Instead of just saying energy went up or down, we're kind of going like with a microscope into the energy sector. And we're saying, if there's 50 stocks in energy that meet that minimum criteria, what percentage of those 50 are bullish versus bearish, are seeing buying order flow versus selling order flow? When there is a dominant percentage within the sector, that increases the likelihood of follow through. So what we're actually tracking now is how long has it been happening, how deep is that conviction, and when is it changing? So think about what I'm telling you right now, and I really hope this kind of like makes a light bulb go off in your head right now and makes things a lot easier for the way that you're looking at the market right now. It's easier to shadow the institutions than it is to predict what's going to happen next. And please write that down. Institutional shadowing leads to order flow stacking. And what we're doing is we are stacking the order flow. Now, kind of tying that back to what's going on in NVIDIA and the bigger picture of the market right now, as we start to notice new order flow working its way into other sectors, that's actually a good thing. That means that money is shifting away from where valuations might be a little bit higher, such as in NVIDIA, right? So this guy's selling some stock, no big deal. He has every right to, right? That doesn't mean there's anything wrong with the company. It might mean that the stock price has reached a place where the cash flows don't necessarily make it a good investment at this price. Well, the obvious question then would be, well, where is that money flowing, right? Good question. And that's what we're looking to do over here. And when we get the sector specific ideas, then we start to break it down into industry groups. So for example, financial stocks the last 3 days are starting to show buying pressure. Real estate stocks for the last 6 days have shown buying pressure. So you see how this now basically directs our attention where the institutions have attention. There's no guessing, no forecasting, no predicting, no doubting, no hesitating. It is infinitely easier to say that's where they're going. And as long as they have attention there and that bright light is shining there, I'm going to hang out with them. So now technology has seen a little bit of heavier volume selling, which is what we saw actually in the QQQ, right? So if we hop our way over to the Qs, and you can actually see over here, look at what technology has done for the better part of the last few weeks. We've had a couple of green days in there, but mostly red. So there's been some selling despite the QQQ making new all-time highs. And you can see that over here. So something else I want you to write down is very, very important. And this will kind of hopefully get all the stress out of the stock market for you. And it really comes down to something that basically says when we're putting these pieces together, we are looking for clues. We are not looking for answers. One of the biggest mistakes that I believe traders do, and again, I owned a trading firm in New York City. We had 300 people trading my capital. At this point, I probably trained well over 15, 20,000 people on the stock market. Is people form an opinion and they want a definitive answer. They want to say, I know what's definitely going to happen next. That is a very tough spot to be in, because if what you expect to have happen doesn't, you kind of get mental breakdown and you freeze. And you then try and defend your opinion or the answer that you found, and you hold on to losing trades too long. Now, raise your hand if that's happened to you, right? It happened to me early in my career as well. So eventually I learned, you keep touching that hot stove and stop. And you start to develop a different mindset that I am looking to build pieces, put pieces into the argument that either increase or decrease the likelihood of that stock following through. And that's where trading becomes a lot easier. And I like to call trading, the stock market specifically, the world's greatest business. So when you start to put these things together, it does become a lot more business-like, as opposed to you trying to be right and avoid being wrong. You don't need to do that. It's way too stressful, all right? So kind of working our way into that now, we're starting to look at some other areas that if the smart money is indeed selling the stock market, or more specifically, selling NVIDIA on the way up, which as you can see here, we're starting to see much heavier volume. That means that we now need to start to look for some other opportunities. And real estate is one area I'm going to start looking. We're also going to be looking, obviously, at financials, which are very heavily influenced by interest rates, right? So now we're going to talk about what's going on with interest rates this week. So we have, this is a very exaggerated headline, but we need to be on top of what's going on this week, which is the core PCE, which is the preferred measure of inflation for the Federal Reserve. So we actually have big economic data coming out this week, which is on Thursday and Friday. So if we take a look at the week, on Thursday, we have gross domestic product, which is a measure of how the economy is doing, obviously very important. But the big one here, which is going to most certainly directly affect interest rates, which is affecting everything, right? Which is kind of why we looked at those financial stocks. The inflation report on Friday, which is pre-market to Friday, is going to influence what the Fed will do. Now, just to kind of give you in easy to understand terms so we can act on it, not to make it easier, but to make it easier to understand so we can act on it, is that what the market really wants heading into this number on Friday. The stock market wants a lukewarm, slightly lower than expected inflation report. We don't want to see a shock in either direction. We don't want it to be massively higher or massively lower. We want it to be slightly lower so that there's no shock to the system, and we're starting to see inflation come down slowly, which is what the Federal Reserve wants. If that happens, we're going to be increasing the likelihood of interest rates finally being cut this year, and then that will obviously lead to the market perceiving that as interest rates coming down, borrowing costs go down, we could afford houses, credit card rates come down, and of course, businesses can borrow money at that lower rate, which should spur some more bullish activity. So the stock market is really relying heavily on when is the Fed going to give us that announcement that interest rates are going to be cut. They're not admitting anything yet. But again, think about what I just said. We're looking for clues to help make that decision. And the Fed's doing the same thing as every good trader and investor should be doing. So you need to be aware of this number coming out on Thursday. And I'm going to tell you where it affects you the most. If you are an active swing trader, not a day trader, not an investor where you're holding on for a long time or you're just getting out the same day, an active swing trader, TD Ameritrade or whatever those active accounts are, if you are kind of on the bubble of a swing trade where maybe you just got in it and maybe you're slightly profitable, slightly negative, you need to know that number is coming out on Friday morning because there's going to be a lot of volatility. And before the market closes on Thursday, it's a very smart thing to make a decision on your swing trades before those economic numbers come out on Friday morning. Now, me personally, if I'm kind of right on the bubble of profitability, I tend to reduce my position size, if not get out, because kind of the reward is kind of out of the game at that point where I'm hoping the number comes in my favor, as opposed to having a profitable trade where I kind of have a little bit of a cushion. So again, I'm not your financial advisor. I'm just telling you how I do things. If it's close to profitability, I will scale back my risk or just get out and then look for another allocation after that. Now, heading into this week, obviously, we have some earnings coming out this week. I will tell you that this particular quarter, earnings season has produced some very reliable trades that have followed through. A lot of stocks have gapped up, followed through. So I'll give you, for example, Oracle has actually been one of the ideas, and I think I have it marked off here, where you can actually see the gap and the stock actually holding the gap. So this week, we actually have some pretty decent earnings. Again, not a monster calendar, but you want to be on top of the opportunities. And you can actually see tomorrow after the close, FedEx is coming out. Carnival Corporation, Carnival Cruise Line is going to be very interesting because some of the other, let's call them travel-related stocks. So remember, again, we're kind of putting the pieces together for if this and this, then this is what I'm seeing, right? So Hilton is actually breaking out right now. So again, I want to put the pieces together for what we can expect coming out of Carnival Cruise. Now remember, these are clues. These are not answers, they're clues, right? So Carnival Cruise is coming out. So we can see that Hilton is actually at or near a pretty big breakout level right now. So again, travel, right? We've actually seen that Expedia is finding some buying pressure recently as well. And Carnival Cruise actually reporting. So maybe it'll finally get out of this box over here. Some of the other big news coming out this week is obviously Micron, right? Micron is in that NVIDIA arena, which is another semiconductor stock. And that stock has actually been pretty strong recently as well. But again, if you don't have a profitable trade in that already, it's a very big crapshoot guessing what's going to happen to earnings. The way that we do things is we kind of like let the dust settle, find our opportunities, and then we kind of ride that earnings catalyst after the fact without having to lose sleep overnight. Okay. So anyway, one of the other big ones that I want to talk about, which also has earnings coming up, which is Nike. Now, if you haven't watched Nike for a while, Nike has actually been beaten up for most of 2024. But what's happening now in Nike, which is really interesting heading into this earnings report, is a lot of other stocks in similar areas, such as Foot Locker, ON, and a couple of other stocks in retail apparel. Obviously, Abercrombie and Fitch has had a really good year. A lot of other stocks in that same arena have had better bullish stacked order flow. And now Nike, what's interesting here, heading into earnings this week, you can actually see not only is it basing on heavier volume, which is a good sign for a potential bottom, we are actually starting to see a little bit of a breakout. So there's room to go. So I want to be clear because we always get good comments after the fact on the video. I'm not saying I'm buying Nike today. Nike is reporting earnings this week. What I am looking for in Nike this week, which is how I map out my trading game plan, is I am looking for Nike to remain outside of this box that I just showed you, have a positive earnings report, and then look for an entry after the earnings comes out, because now we will be getting validation outside of that window, right? If the stock comes out and earnings disappoint, I leave it alone and I just go to allocate my money someplace else. This is the power of having a game plan, right? Super important to have that game plan. So what other kind of stocks are we looking at this week? Well, there's probably a really big one this week that I think everybody is kind of focusing on. Obviously, NVIDIA had that stock split about 2 weeks ago, I believe it was. Now, Chipotle, the stock is CMG, is about to have a historic 50-to-1 stock split. So if you didn't happen to read the news or anything along those lines, the stock is just a cash machine. Looks pretty darn good from, obviously, it's a $3,000 stock right now. But if you have ever wanted to invest in CMG, Chipotle, with this 50-to-1 stock split, the stock is going to open, I believe it's June 26th. You could read your news to determine that. I'm pretty sure that's what it is. June 26th. On market open on Wednesday, June 26th, which should have the stock opening up somewhere around $65 to $70, depending on where it closes the day before. So this would be a very interesting one to keep an eye on as well. There is kind of a history of stock split companies opening lower and then rallying right away. I have seen some professional traders that I know play this in one of two different ways. They will either buy the stock on the stock split, expecting those buyers to step right back up and more retail investors to step right back up. Or, and again, this is all for educational purposes, I have seen and traded with quite a few people that will sell puts on stock split companies and try and capture that premium. And if the stock happens to push down even further, the stock will be put to them at a price that they absolutely love. So a couple of different ways to potentially look at CMG this morning and heading into the week. All right. One final thing that I'm going to be focusing on a lot this week, these weight loss drugs are starting to really, really shine. The companies themselves are starting to really, really catch a bid. So again, if we kind of work our way through the research that I do for the community, some of those ideas that we're looking at in the drug manufacturing industry group, I lost my train of thought there, are actually stuff that we should be paying attention to. So basically what we're talking about here is Lilly, NVO, VKTX, Amgen, Pfizer, and GPCR. And you can actually see that I'm actually looking at NVO to start the week. So gave you a bunch of stuff to consider this week. I think probably the biggest thing is taking a look at the Federal Reserve and what they believe is going to be the next decision that they're going to make based on Friday's inflation data. Very important for you to know, very important for you to know as a swing trader holding into Thursday, heading into Friday. We also broke down what it means to shadow the institutions, what order flow means, how I do all that research for our community, and maybe inspired you to do that a little for yourself. Again, if you want me to do it for you, click that link in the description. I'd love to be your coach. You actually get coaching sessions with me as well. Let me know if you're interested in that. I'd love to see you on the other side. And the third thing, maybe the fourth or fifth thing that we taught you today is understanding how to identify when institutional attention increases in a particular stock by running that scan that I just showed you. It's a super simple scan. And it's actually one of the first things that I do every day when the market closes. So I hope we gave you a bunch of really good actionable stuff for the week, including being aware of what's going on Friday. If we did a good job today, please do me a favor, hit that subscribe button. If you have any follow-up questions, leave those comments below, and I'll be more than happy to get back to you as soon as I can. All right. Thank you so much. Let's make it an awesome week. I'll speak to you soon.